A market cap opportunity of $30 trillion, okay, from tens of billions today. Our new number is 80 trillion. So we think that is the big new frontier, but it's going to be...
Welcome back to Investment Tribe, where you've subscribed because you want to learn all about cryptocurrencies, NFTs, and other digital assets. Don't forget to leave us a thumbs up and enable the notifications so you'll be alerted whenever we post a new video. Today, we will be talking about the sector that Cathie Wood claims would be the biggest in history. We will discuss why is she so bullish about it and how potential investors like you and me can profit from it. So better stay tuned, because if this prediction turns out to be true, and most of the predictions are backed by data by the way, then you might want to check it out as early as possible. First, who is Cathie Wood? She is the CEO of ARK Invest, which is an investment firm that focuses on 5 different innovation platforms: energy storage, artificial intelligence or AI, robotics, genome sequencing, and blockchain technology. So, care to guess what was Cathie Wood talking about among those 5? Nope, it's not blockchain, not energy storage. She's talking about artificial intelligence, which she predicts is going to increase by over 1,000 times in value over the next 10 years. Now, this is not just a crazy prediction. This is backed by data that we have today, and I will present it to you. We all know the concept of AI. We've seen it in movies, video games, and on the internet, but we never really think about it that much. It's just there. But it's believed that this industry will provide great value to society. From 1960 to 2010, computing times increased by 2 times in speed every 2 years. This is a famous theory by the computer scientist Gordon Moore, which we now call Moore's Law. Now, the pace of development of computers is so crazy that the computing times are now increasing at 10 times per year. This means that not only will our computers be so much faster in just the next few years, but it will also allow AI technology to improve incredibly fast as well. And their services are getting so much cheaper too. In 2017, the cost of identifying 1 billion images was $10,000, but now it is down to 3 cents. That kind of steep decline is something we've never seen before in other industries. What this means is that AI will be able to do more and more complicated tasks according to Stanford's deep learning benchmark. They measured that AI performance greatly improved by 16 times in just 3 years. This service is very helpful especially to other industries like autonomous driving, healthcare, genome sequencing, supply chain management, virtual assistants, and so much more. The effect of AI's training cost getting cheaper will also result in a remarkably deflationary impact on the economy if we're talking about the long term. According to Cathie Wood, AI's training costs drop 68% annually because with AI, you can train it just about anything, including training itself, and the machines don't need reward systems unlike humans. The companies that have the best AI expertise will be much more favored in the future rather than those companies that haven't spent enough on innovation. She added that AI is going to be a part of every industry. That's why we're already seeing that DNA sequencing, robotics, and blockchain are all deflationary because they're cutting down the middleman. ARK Invest initially projected that AI would create a $30 trillion market value within the next 10 years. But now, they are projecting it to be 80 trillion. So their first prediction is wrong because it is now even bigger. But how did they come up with this calculation? One major reason is that AI technology has been started to be used by other industries. For example, a company named Verge Genomics developed a machine learning model for developing drugs. Another example is that Microsoft is now creating innovations in blockchain technology. They created an AI model on it so that people can build models off of blockchain data. And of course, the industry of self-driving cars is now at our fingertips. Tesla and Waymo are at the forefront of this technology, and they are very close to releasing their autonomous vehicles. Together with AI's exponential decline of training costs, it is now fair to say that complete self-driving will be possible within the next 5 years. Transportation is one of the major industries in the world, so lowering the cost of it will surely affect the global market. Cathie Wood also believes that the transportation and genomics industries are the ones that will evolve much faster than we thought was possible. I hope now you understand why Cathie Wood believes so much in the potential of AI technology. The only question now is how we, the potential investors, can capitalize on this market. Well, the first way is to invest in big pharma and biotech companies. They are offering a unique opportunity to capture big upside potential with little to no downside. Let's look at Pfizer, a very familiar name even before the pandemic. They are now trading at a trailing PE ratio of 18 and a forward PE ratio of just 10. Their stock also offers a dividend yield of 3.6%. These are the characteristics that a smart investor should look for. Cathie Wood invested in Pfizer in late 2020 because she believed that this is the next golden age of pharmaceuticals. The first one was in the 1950s with the development of medical breakthroughs during that time, like in surgery, drug discovery, and vaccines. The announcement of polio vaccines being safe and effective in 1955 was a major event. And it's possible that we are now in the second golden age, but now we are alongside AI technologies. AI will definitely speed up the process of drug development while lowering prices. The biotech and pharma companies that engage in the development of DNA sequencing and CRISPR gene editing, together with artificial intelligence, are the ones to watch out for, according to Cathie Wood. The returns on their R&D investments in the last 20 years have dropped from 20 to 7% on average, and with AI technologies, they believe that it will be even more reduced by at least 25%. This means that the time to market them could be 25% less. Again, not all companies are engaging in this type of innovation. Another way to invest in AI technology is just by investing in ARK's Autonomous Technology and Robotics ETF, which has the ticker symbol ARKQ. So, if you want a more practical way, by investing in an ETF or exchange-traded fund, they will do all the work. Your money will be divided into different AI and robotics companies that will give you a more diversified portfolio automatically. The major company in ARKQ is, no surprise, Tesla. They are spearheading the development of self-driving cars which have the potential of unlocking trillions of dollars in value. But a lesser-known innovation by the company is the DOJO supercomputer, which is the world's most powerful AI training machine. The secret ingredient of the DOJO is the DOJO D1, which is an incredible chip and is miles ahead of its competitors in terms of performance specs. The DOJO supercomputer will allow Tesla to train autopilot with millions of hours of video footage. The second largest company in ARKQ is Trimble, a leading AI company that is more focused on developing physical tools that help other companies to collect and analyze data. These tools are GPS, lasers, optical accessories, and so much more. For example, Trimble has been able to connect devices on trains that collect vast amounts of data. This will be of help for train companies to increase reliability and improve maintenance. Trimble is part of the S&P 500, and they are proving to be very profitable with their stock currently, trading at a trailing PE of 41 and a forward PE of 28. Their revenues are also growing at a great pace, by 5 to 15% a year. Another company included is the UiPath, which is an AI company that focuses on mimicking manual online tasks. Unlike Trimble's slow growth, UiPath is experiencing very fast growth within the last few years. Their revenue is increasing at a rate of 60 to 100% per year. AI's drastic decrease of 68% per year for its training costs makes it an industry to look out for today. It has enormous potential and they're just getting started. So if you're very interested in this industry, there are other companies that are getting involved with AI, like Fang, Unity Technologies, Baidu, Alibaba, John Deere, Tencent, and Palantir, among others. That's our video for today. I hope you learned about the enormous potential of AI. Again, these are just speculations, but the way I see it is that we cannot stop this technology anymore. We're on the verge of experiencing the full potential of artificial intelligence, especially if you have guys like Elon Musk leading the pack. But that's just my opinion. I guess we shall wait and see. Well, that's all for now. This is Investment Tribe. See you again tomorrow. Keep in mind to like, share, and subscribe.